Mr. H.M. Bangur, the MD at Shree Cement, is with us. Hi, Mr. Bangur. Good morning. Thanks so much for making time and speaking with us. Let's begin by discussing pricing itself, right? That big conundrum that the entire sector has been facing for the last decade. The moment the price hike is taken, the demand kind of rolls back, and that's the reason some of the companies have to roll back their prices as well. With the onset of monsoon now, do you expect further pressure on the pricing from here on for the next few months?
No, the maximum pricing pressure time is over. In in the first quarter, April, June, the volume expansion is negligible, maybe 1% or so. But yearly, we expect volume expansion of 8 to 10% because the GDP is growing at 7%, that roundabout. So, in the next 3 quarters, the demand has to maximize. The next 3 quarter demand will be around 9 to 10% to make up for the lost time. In the first quarter, there were elections, there were water shortage, uncertainty of election results were there. Now all those is over.
Bangur, we were just chatting with a mutual fund expert and he was talking about as to how the player with the largest capacity expansion is the one who's going to actually win the race in the next 2 to 3 years. Highlight for us, what kind of capex have you, outlined for yourselves in the next 3 to 5 years?
In next 3 years, we will be we will be more than 80 billion tons. And next 6 years, it will be about 100 million tons. 3 years, I can say, because the work is already going on. We are sure about what we will be achieving. Next 3 years, few uncertainties are there, but more or less it is lined up.
I want to take a step back and understand from you slightly on the larger scheme of things. When we listen to, players such as yours or even the Birlas, Adani Cement, in the next 3 to 5 years, the kind of massive expansion plans they are undertaking, some of them experts believe may not be possible organically, and hence the speculation in the market that X players going to be taken over, Y players going to be taken over. I want to understand the demand trends here in India with the capex from private side, public of course has been, the government has been very active. What is the larger direction do you see for volume growth and profitability in the sector, 3 to 5 year kind of outlook?
Volume growth will be phenomenal, as government of India is now having lot of surplus funds for capital expenditure. In the last 3 months, the budget deficit is only 3% of the targeted budget deficit. That is very positive. Collections are well. And our subsidy to the GDP ratio has also come down. There is enough scope for capital expenditure. This is one part. And secondly, once all the needs of households are met, that is clothing, fooding, etc., then in all the world history, whenever this kind of $3,000 or more per capita income is there, suddenly the cement demand has to increase substantially. Right now, our cement consumption is around 300 kg per capita, and world average is 550. World average means developed, underdeveloped, all countries. So we will have enough expansion plan, enough growth plan. The need was always there. Need is converting into demand now because the money is available. So need part is tremendous. Forget the need part. It is the money availability which will set the demand low.
Sure. So the need part is now getting converted into demand as well. But talking about demand, Mr. Bangur, you said the volume growth over the next 3 to 5 years is going to be strong. What does that mean? Should we expect a double-digit volume growth for the next few years? And when you say that worst is over in terms of pricing, do you expect a price hike soon? If yes, to what quantum can we expect it on a aggregate FY25 basis?
In cement industry, when we say very good price rise, it will be little less than the inflation. That is the normal trend. 1 year it can be high, but rest of the profit is coming by volume expansion and more efficiency. But if you see 5 year or 10 year or whatever history period, the cement price increase is less than inflation. That is the 9 out of 10 years. Now the volume growth will be coming from government infrastructure, which will be very strong. And private, everybody now is having more money, they want more privacy, they want more room. So private consumption also will be increasing, individual house builders. Now, any village will not have any kacha house that has already been achieved. So now pakka houses are built, so everywhere. Cement consumption is small, but with a large number of base. So total cement demand is very high.
But sir, coming back to the number with respect to volume growth, you had guided for a double-digit volume growth for FY25. Do you stick to that, at least 10 to 12% kind of number?
No,
Okay.
I said 9% or so, 9 to 10%, very high single digit or very low double digit. That's all. 9 to 10% is what my target is.
The other thing, sir, that I wanted to talk about is the fact that, industry experts have been believing that 28% GST is pretty high and that it could come down to 12 to 18%. Do you have any sort of inkling that, this could happen in some time?
I don't think there is a. These are the things we are not really concerned about GST. We are more concerned about government spending all the GST which is collected from the industry on infrastructure. Because our consumption has to be strong. Government has to have surplus money. I don't think GST reduction will increase in demand substantially. It will definitely have some effect, but basically cement demand is price inelastic.
Are you also looking at, candidates which are up for grabs in the east or the south capacities, or you are mostly, clear of your chart on capacity addition, not going the inorganic way?
We are totally geared up for 80 million ton organically. Inorganic growth, we will be looking at it, but not very aggressively. If something comes up which is of right size and meets our overall demand, overall expectation and overall scheme of things where we want to be in 5
I'll
years
take a follow up
later,
on that.
then only we will look at it.
You're open for acquisitions only at the right price. You will not overpay and overbid just to add capacities. Are there some are there some fair priced assets up for grabs anywhere now? Everybody knows that there's a big buyer or two in town, so valuations have already become kind of steep. Are you in discussion on any of the fair price or people who want to partner with you?
Right now, it will come suddenly. Nobody knows for sure. Now, nobody was expecting anything big in India Cement. Suddenly, it has come up. So will so many more things. And whatever consolidation is there, if it is directly beneficial for someone, it is indirectly beneficial for rest of the players.
But which is playing out in the industry is a consolidation. And just before we let you go, sir, your EBITDA per ton is something which is enviable for the entire industry. You stand very strong on that. What's the next target one should watch out for on an EBITDA per ton basis? Is that 1250, 1300 kind of number on the anvil?
Yes, it has to become. For very long, we have been stuck at around 1,000 rupees or so. Price rise have not taken place, but the price has to come up. EBITDA has to go more than 1,300. Otherwise, forget about the acquisition. Even the new plants will not be sustainable for long.
Bangur, just in continuation to what my colleague was just asking you a while back about acquisitions, I wanted to understand whether there's anything that you've earmarked in terms of an acquisition size, or is there any geography that you may have identified or a company which you may be working with? I'm sure you don't want to tell us the name, but anything which could be in the works for you?
Telling the name or telling the geography, because there are so few targets, it is almost the same thing. I will not better comment about it.
Have you earmarked any, any sort of acquisition size that you may be targeting?
Yes, we will be targeting only something like 3 to 5 million ton. smaller companies. The big companies, because we have already so much money and our long-term plan of growth of 80 million ton is there. Once you acquire something, your initial plan goes haywire because then there is no more money left for your normal growth.
That organic growth path chart out. So thanks, Mr. Bangur, for making time and speaking with us and talking to